See, 1225 candle gives sell signal from 245 premium, 589 premium, single trade gives 26,000. Okay, but by doing manual, we can't handle our emotion. Okay, from full day, Quantman will continue the trade from 9:20 to 15:25. Now one more, we backtest from 24 to 2025. 1 Jan 2024 to 10/1/2025. No conditions, I don't change anything. Just a simple condition. Current close crosses above super trend, current close crosses below super trend. If the condition satisfied, 250 premium entry and a maximum 5 trades in a day. From this 13 months, actually this is 13th month going on. From 1 year period, total 395 transactions happened. In that 395 transaction, the strategy doesn't give good performance because there is a drawdown. The equity curve doesn't look like smooth. Okay, we need to upgrade this strategy. The maximum drawdown here is 25,000. Okay, just one simple condition enough to create a good strategy. We need multiple indicators, multiple conditions to optimize the strategy to generate better results. Okay, now you can see each and every trade. The same data you don't need to use current candle. Okay, now I add one more indicator, relative strength. Default value, no other changes. Default value. Okay, RSI is a underlying indicator. For underlying indicator, we don't need current candle, just we need only value. I put relative strength index is above 70. Two conditions I give, one is super trend condition, another one is RSI condition. Both are different indicators, different parameters, but the execution is same, 250 premium. Okay, same trades, no other changes. I do back test. Here you can see this is the first one, just super trend indicator only. Here I add one more indicator, RSI. Two indicators added, 25 transactions only done. Only one indicator gives around 395 transactions. One more indicator, only two indicator added, the transactions are reduced. Okay, RPT, risk per trade, increases, drawdown from 25,000 to 7,000, and even more we need to upgrade the strategy. Now I am adding one more indicator. Actually, I am creating a sample strategy. This is not a best or better performing strategy in live market. I told you how to create option buying strategies in Quantman by adding one by one indicator to optimize the result to improve the strategy efficiency and RPT. Just now we created the RPT, improve the RPT to 0.29. Okay, within 1 year back tested data, we can't assume the strategy is good or not. We need more back tested year data because from right now for Nifty we have a option data started from 2019. In that scenario, only Corona happened in 2020. Okay, multiple scenarios define the strategy performance. Whatever happens, if the strategy creates better results, give consistent return, means it create a edge to that strategy. For that, we need to backtest multiple combinations. If the market isn't trending, means sure the strategy will take entry and capture the points. We need to find that strategy. Okay, I am adding only two indicators and one candle to optimize this level. Now I am going to another one. Same condition, I am adding one more indicator, pivot point. Generally, pivot point is look. I am adding one more indicator, pivot point. Day traditional. There are multiple versions. I am using just as traditional and day time frame. Adding, and here pivot point is a current candle. Now what I am writing the condition, current candle close is above pivot point R1 and save. That's the only condition. I don't change anything. Do back test. Now adding pivot point, it reduces the strategy performance. Now here I need to change the condition. I change the condition to crosses above to is above and do back test. Only one condition changed, crosses above to is above, strategy will give performance. But here even we need to improve the strategy. This is the old one, this is the new one. But compared to this, here our trade count decreases from around 110, 112 trades taken, winning probability is 38%, risk to reward is 1:2 risk reward, drawdown is 18,000. Okay, we need to improve more, even more. Now I add one more indicator, and do backtest. This is so far we backtest only on 1 year only from 24 to 25. Another one indicator, Bollinger Band. Actually, Bollinger Band is a volatility indicator, so we need to use current candle. One more indicator, current candle close is above Bollinger Band upper band. Total 4 indicators I am using and do backtest. Each indicator have specific criteria. Okay, Bollinger Band is a volatility indicator, super trend is a trending indicator, momentum, RSI is a strength indicator. Okay, compared to the previous strategy, this strategy even more better. Okay, drawdown reduces a little bit. Now we do back test on 2 years and 3 years. See this from 1 year perspective, the strategy is not performing. When it comes to 2 years, January 2023 to 2025, 2 years, the strategy is performing. See the equity curve, little bit 45-degree angle, strategy profitability increase, trade count increase, RPT increase compared to previous strategy. This is 2022, even more. Our risk, total profit, returns also increase. See the performance, the strategy increase steadily. These are little bit intermediate trend. This happened around January to April, 3 months period. But when you see the strategy on longer period, it show the overall perspective whether the strategy is performing or not. Okay, now I backtest on total data, which is for Nifty we have backtested data started from 2019 March 11 is the March 11 2019 is the first day Nifty options started. We do backtest. See this from 2019 to 2025, this strategy generated around 3L profit and total trades happened is 600 plus trades. Okay, 648 trades. 1.2 RR risk to reward ratio and 18,000 drawdown. Risk to reward ratio is 2000 average profit divided by average loss. 1.7 risk to reward ratio with 51% probability. But this is not only we can assume that this with this strategy the strategy will perform, because in Quantman the back test on signal price. But in our broker account, trading account, calculate on traded price, we end up with a slippage. So we give 1.5% slippage. When you give 1.5% slippage, it will show the overall performance. Everything reduced. Now we need to even improve more by adjusting some other indicators, some other criterias. Okay, now I improve even more by adjusting conditions. What I do, I am adding one more indicator. Commodity channel index, 3 minute to 5 minute time frame. Save. Commodity channel index is a underlying indicator, so we need to put value. Okay. Okay, by adding one more indicator, see here 1.22 risk per trade, 1.44 drawdown decreases from 18,000 to 15,000, winning probability 53%, 51, 2,000, 1,100, 16. The trade count, unique changes in trade count 648, 500. Yeah. The trade 140 trades decreased. Okay, by adding one indicator. Now I need to put stop loss for this trade. Even I give the indicator stop loss. This is indicator stop loss. I give percentage stop loss for my own account, means the required capital is 250 into 75 per lot. Required margin is 18,000. So I put around 25% stop loss into 0.25, 4,000. Around 5,000 is my stop loss. So what I do, I put 25% stop loss and hit enter, because here it shows 6,000 max loss. You see the required margin. The required margin is right now 18,000. With that 18,000, I add this drawdown 15,470. 2 times of drawdown we personally have, because these are backtested data. From that backtested data, we don't know the same drawdown happened or even higher the drawdown will happen. So for precautionary measures, we put 2 times of drawdown shown in the backtest. Okay, here 15,000 shown. I double the time, which is 30,000, plus required margin to take trade is 18,000. Total for single lot to deploy, I need to maintain a margin of around 49,000, 50,000. If you deploy one lot in option buying in Nifty, means you need to maintain 50,000 capital. If you have good strategy, but your risk management and position sizing is not properly, means you will end up with losses. By putting 35% stop, 25% stop loss, my loss reduced to 3000, but no other changes, I think so. Everything is same. I use the super trend as a exit condition. The super trend have two criteria. One is indicated stop loss. Another one is super trend trail act as a trailing stop loss. Whenever the market TSL also just 25%, right? From I need to minus the 20%, so my stop loss reduced to 5%. Profit of 15%. Like the way TSL works, we using TSL, even use TSL, the strategies look like same. This is one strategy for Nifty. We have F1 data on 18, so less data. We can't conclude this as a good strategy because by seeing the less backtesting on limited data, we can't conclude. We need more data. I add one more indicator, CPR. One person messaged here, CPR. Here CPR, I don't change anything by default value, only one more indication. If CPR is wide, means wide is false. See this, how many backtest data I taken from one indicator to right now we backtesting on total 6 indicators. From these 6 indicators, we created one strategy. Once the backtested work finished, we move to risk management and position sizing. This is only backtest. This is not a these are past performance. Past performance is not indicative of future results. Based on the condition, the strategy worked or not, the strategy created return or not. Only those things we see. We never consider these values. We consider only the risk per trade and winning probability. Okay, max loss, max drawdown. These are changes every now and then. Only thing we consider is risk per trade. The strategy will return will CPR value. In CPR, the strategy performance RPT decrease, but the drawdown increase. Drawdown also decrease. One more backtest I do. I have one. The same condition. The same condition. No other changes. Only I change the instrument type, which is Sensex. In Sensex, it created average return because we can't conclude the strategy will work in the future because we have limited data, just 1.5 years. With that 1.5 years, we can't conclude whether the strategy is working or not. The risk to reward ratio is 1:1 risk to reward ratio with 40% winning probability. The drawdown is 8,000. Just wide. Okay, if I use CPR wide is true, means my trade count decreased drastically, but the risk per trade drawdown, those things increased. My RPT, winning probability increased. My risk to reward ratio increased. 3.2 RR. It's a good strategy, but the trade count is less from 2019 to 2025. Just a single total 27 trades taken in 6 years. By strategy wise, it's good, but we are traders, right? For 6 years, only 27 trades means we have a lot more patience. I don't consider this strategy. Here I add even more with one indicator. Yeah. Better I change the pivot point value from R1 to R2. Maximum market is in range of less than R1, above S1. If market crosses above R2, means definitely there is a trend which moves the market. The strategy performance increase little bit from 0.89 to 1.2. Drawdown decreases. Trade count, yeah, trade count decreases. 1.8 risk to reward. Total 53 transactions. Here 121 transactions or transaction count decreased. Just only one value changed. From pivot point R1 to I changed pivot point R2. Strategy performance increase, but trade count decrease. Like this, you need to do back test on multiple scenarios, multiple year-wise. See this indicator. I am just adding the basic indicators with the condition writing. You need to mention whether it's overlaying or underlying. Underlying indicator means you need to put value. Overlaying indicator means you need to give the current candle conditions. I'm using 25% stop loss with the TSL, 20% TSL. Just 5 transactions, see the performance. Likewise, you need to backtest. This is a sample strategy. This is not a good strategy. or the strategy will work in live trade, I don't know. I'm just backtesting on the required indicators. From that indicator, it gives the performance. Quantman backtest data gives the performance. Now we need to put it on paper trade once we deploy. Here go to deploy strategy in live paper trade. Once deploy, it will show stop run. Okay. If you choose auto trading, it asks for which segment you want, intraday segment or carry forward normal segment. Once you choose normal segment, make sure your entry and exit order is in market order. If you place in limit order, if you place your orders in limit, maximum when that entry taken, your order will not execute because of it's in limit order. When the market is in bullish, for example, if your limit order at 100, but within 1 second the market reaches 110, your order will not execute. You need to wait for the market come to 100. That's why we use market order. We end up with a slippage. Okay. Next, put signal price and deploy strategy in live. Okay. These two varieties you can deploy. If you want to deploy in auto trading, you can click auto trade. Once condition satisfied, directly place order in Angel on account. If you put a paper trading, take the signal price as entry. Okay, auto trading. If you choose MIS order, directly show. For example, I want to deploy the strategy, click paper testing and deploy. Once strategy deployed, the deployed strategy shows page look like this. What are the indicators we are using? It show like this. And order type, either paper trade or auto trade. Okay. Here my strategy is in live. I mean paper trade. Status started. Started means the strategy is currently running. Okay. Now I need to stop the run. If I want to deploy in auto trading, live trading, I need to select the timing. If make sure if you deploy in intraday order, your exit timing should be 15:14 because broker RMS will square off your order from 15:15 to 15:20. So your Quantman exit timing doesn't crosses above 15:15. If you deploy strategy exit timing with 15:25, you are deployed in MIS order means broker RMS will square off your exit position around 15:15 to 15:20, but Quantman doesn't know. When Quantman exit condition satisfies around 15:25, Quantman gives the sell signal in your broker account took a reverse order because this is sell signal, right? The same strike Quantman short, broker short the leg. That's why if you deployed your order in MIS margin intraday square off, make sure your exit timing will be 15:14. Okay. In the strategy, I backtest on 15:25, so I use normal order and entry and exit. My entry will be market because whatever slippage I accept it, I take it as entry because once condition satisfied, I'm willing to end in the trade. I don't want the signal price. If you put a limit order, it wait for which how much seconds? 2 seconds. In 2 seconds, your order will not execute limit order. It will modify to market. In 2 seconds, you end up with a huge slippage. That's why we use always market order. There is positive slippage or negative slippage also available. Also there. You specifically give 2 seconds. Wait for 2 seconds. And then after 2 seconds, modify to market means you end up with a huge point. You lose huge points because when market is in pure bullish time, one single candle, you know, right? In single candle, market moves 50 points. In 1 minute candle, 50 points, 100 points. So we in live account, we saw within 3 minutes, our trading account goes to 1 lakh and it comes to zero. That much points we saw in our account. So that's why we use always market order, both entry and exit. And then use signal price for stop loss, SL and take profit order based on which price. Because we once condition satisfied, when the signal comes to our broker account and traded, that is traded price. In between 2 points, 3 points slippage. Okay, traded price, if you use 30% SL for 100 points, for example, I draw one diagram here. Here, I give stop loss based on traded price and signal price. Okay, if I give Once you give signal price and then deploy means, here you can see the order type is automatic. Automatic means whenever the condition satisfied, it directly goes to your broker account. If you have funds, order will execute. If you don't have funds, your order will be rejected. Quantman will initiate a call. The status is started. Okay, run is live run. That's all. So far, any doubts, any queries, kindly contact. Please put your comment in chat box.
Trading and investing involve substantial risk and are not suitable for every investor.